Good afternoon, everybody. Sound check. Can you hear me okay? You're out there. I knew you were out there. Jeff, first to type on the screen. Hi, Art, Brian, Bruce, Cal, Chipnuts here, Christina. Hi, everyone. Welcome to today. It is exactly 5 o'clock, and it's been a little while. This is probably the longest time I've gone without a free event. And I explained to you in an email that it was largely due to our little hurricane that came through. While it only indirectly affected me, it did affect a little family. So I rearranged the calendar a couple times. We're all back in business here, and I'm going to make it up to you with some extra educational emails coming up. And you can always check out the DTS calendar. I'm sure most of you are aware. Well, here is for those of you that are new. I'm going to take just a second and introduce myself, which I don't normally do. I haven't done that in a long time. But there's always a lot of new people at DTS, and of course, over the last month, there's been a lot of new people who are curious what this is all about. So I'm going to take a minute and just review who I am. There's the free stuff page, which I'll refer to, and I'll give you some other links to likely. And once you're there, off on the left, you can see the different places you can go on the website. But here is the calendar where you can see the upcoming events. So today's discussion is going to be called Recent Market Analysis. You may be asking, Paul, is that recent market analysis, or is it recent market analysis? The answer is yes. It really doesn't matter. It pretty much means the same thing. We should go for 1 hour tonight. I keep them to an hour so you can plan your schedule. So we'll be done by 6, or I very rarely go a couple of minutes over. And this will eventually get posted to the free stuff page and to the DTS YouTube site. So if you want to come back and pick up some juicy tidbits that you missed because you were watching something on TV when I said something critical, you can always go back and see that. Nice to be here live so you can ask questions. Of course, it's very difficult to ask questions to a recording you're listening to on YouTube. This is what the advertisement said that you got in your email and everything. I want to read I don't normally do this, but I want to read the introductory comment there because I think this is kind of a special, extra special event you will like, very educational. Few people truly appreciate the beauty, and I'm going to say simplicity, of technical analysis. It applies to individual stocks, Forex, commodities, and yes, the market itself. This will be a review of some of the market action over the recent weeks, and while you may be impressed, you will find that it's not going to be hindsight review, but rather how the market was handled by DTS, Disciplined Trading Strategies, i.e. me. For those of you new, my name is Paul Lange, and I've been a trader investor for many, many years. I started DTS just over 5 years ago in August. Before that time, I spent like 19 years in the market with a bigger company called Pristine. There are a lot of big markets way back in the day, as they like to say. I hate that expression, actually. And I was with them a long time, and I was, all the good stuff, the senior moderator and the senior educational person, all that good stuff. But I was just an employee there working for a company that actually at one point a long time ago was pretty large. I wish I would have left a long time ago, to be honest with you, because doing things on my own has been so wonderful. It's been so redeeming. It's been so very self-fulfilling to me, and to be able to help people in a better way. Big companies have inherent problems. The one I was with was pretty good. I think they really tried to help people, but they're a big company, and they have bills to pay, and they have things they have to sell, and I have a little different attitude. I just kind of have a laid-back attitude. I'm here having fun, doing stuff with the people who want to do stuff with me, and I never pressure anybody. We never have sales. I don't have salespeople. You just listen if you like what you hear, and you decide you want to either subscribe to one of the services or to join the educational program I have. That's up to you. You don't get a lot of emails about it. You don't get me harping on you about it. And I'm also willing to help people who just want to try and learn on their own. And that free stuff page site that I gave you is a great spot to start. I consider that to be the greatest source of free information anywhere on the internet for trading. Useful free information. I shouldn't say the biggest source, period. I'm sure there are big sites out there that have more general information, but I think it is the most useful site out there anywhere on the internet, even with any of the big sites that you go to. You can spend an entire week at this point looking over the free stuff page and also the archive pages to the free stuff page. So what else is on there? I personally like day trading in just the opening hour or two of the day. I do not like sitting there all day. I do not like wasting my time all day. I like sitting there for the opening couple of hours, and then I sometimes have positions that are open during the day. And then I also like long-term investing. I'm not real big on the in-between stuff, what you call swing trading. I like the day trading, get in and out in the morning a little bit, hold some stuff all day maybe, and then long-term. Those are the things that I like. Those are the things I have services for. You're always welcome to cruise through the website and find out how you can get a trial to any of that stuff. I'll leave that up to you. Or you can always email me if you have any questions. I should give you my email. So there's a quick little thing about me. I don't normally do that, but like I said, I don't think I've done it in probably a year or something. I do it when I am a guest at other places. And actually, when I'm at other places, I tell them in the beginning, I'm not going to tell you to the end who I am, because if you don't like me, you don't care. And if you do like me, you probably figure it out for yourself. So let's get going for tonight. The purpose of tonight's events is to show off, not to show off me, not at all, but to show off technical analysis. Newer trader may be wowed at any event that has a skilled moderator because they justify what happened in the past. And wide-eyed new traders see a new future for themselves and want a new way to make money, so they believe anything. Does that sound at all familiar to any of you, especially if you're new? I know a lot of you have been around a long time, this probably doesn't apply to you, but maybe it did in the past. You ever heard somebody talk, but they're just talking about what happened? I mean, well, you hear it on the news every day, right? Every day on the news, they are telling you why something happened today or yesterday. They don't have a clue what's going to happen tomorrow, and that does not help you make money. But even if you go and listen to a lot of people who talk in positions like I am or have videos out there, it's an awful lot of it is just about teaching you what happened in the past, but how does that help you in the future? A newer trader may be wowed. The market hit this support level and bounced. This is how you make money. This is where people end up getting in a lot of trouble because they listen to what I call the Mickey Mouse technical analysis manual, or just a very simple version where you look back at a chart, you find stuff that went the way you thought it would go, and you explain that that's how it worked. It hit the support level, it hit this, boom, boom, boom. Or maybe you don't even like charts. Maybe somebody you're listening to says, oh, the FOMC said they would stop raising rates and this caused the market to bounce, and the market hates interest rates, so this is how you make money. And you always get this ending thing that this is how you make money because this is what worked yesterday or last week, or sometimes you may even hear, here's this great little technical indicator and look at it work. It'll work 17 times in a row. This thing is flawless. And that's how you make money. But what happens typically with all of these things that make you money, everybody? Yeah, they don't. Well, they do once in a while. They say a broken clock is you're right twice a day, but they don't consistently make you money. I can find anything and justify it makes money if I look for the instances where it works. But the thing is, you have to find the thing that gives you odds all the time. Nothing works all the time because the market is not a mathematically precise instrument. It's not architecture. It's not engineering. It's part art. So it's no, sorry, art. But you have to find, and what I call it is the language of charts. It's understanding how to read a chart properly. But some people are better than this, and I want you to see if you follow along with this, because I bet you anything you've listened to people that talk like this. Anybody can go back and tell you what happened, right? You could just make up anything you wanted to, just say, here's what happened. I already know the market went higher last week, so here's the reason it went higher. And you can say anything you want to, and a new starry-eyed trader is going to believe you. I'm amazed, that a lot of traders when they're new, hey Carmen, a lot of people when they're new and they see a glimpse of how you can make money and it seems so easy. If you notice, they just tend to believe anything. It's just like, I want to believe, and I see people like repeat stuff that's like that, and I'm thinking that's just stupid. What are you talking about? But you see money being made and you think, oh, I got to learn how to do that, and you believe almost anything. How about this one? New trade may be wowed at any event skilled moderator because justify what happened in the past. So you believe anything. Yay. That's how you make money. Wow. But how about this one? How about talking about the future? Because things can be phrased in a way with conditional statements that a wide-eyed new traders want to believe. You ever heard comments like this, everybody? Listen to this. This is a strong move, and as we run into this area, we will encounter sellers. If the bulls can overcome that selling, we will move higher. But if not, we will stall or maybe drop. Doesn't that sound very intelligent? Doesn't that sound good? What's the problem with that comment, though, everybody? You know it because I'm sitting here making fun of it, but what's the problem with that comment? Yeah, he's never wrong. But do you realize that if you really listen to it, this is the way almost anybody in my situation as the teacher talks, or everybody on the news talks. Is that true? This is the way everybody talks, correct? They're never wrong. They're useless, but they're never wrong. Because naturally, if the market moves higher, You see, the market moved higher, like I said, when the bulls overcame the selling. If the market moves lower, you see, the market moved lower, like I said, because the sellers were encountered, right? But you know what? Everything I'm going to show you tonight is based on calls, comments, or trades that were done before the fact. That's what you should be impressed with if you're going to be impressed, not explaining after the fact. I'll explain after the fact too, but then you'll see also that this is also explained before the fact. Because no matter how careful or skilled you are, the only way to make money is to enter the position before the move. Maybe no one has explained that to you, or also the only way to keep your money is to get out before your long position completely drops or your short position completely rallies, right? Is that true? Can we kind of agree to that? That the only way to make money is to get in before the biggest part of the move, right? So these people that say, oh, you have to wait till there's a lot of volume coming into the move. Do you see that that's really a stupid comment? All that volume means that those are all people that should be moving you higher, but they're not. They're moving your entry higher without you, right? Thanks, Art. Art is in the trading room with me, and I occasionally tease with him for some reason. I don't know why. So we're going to look at three things tonight, the educational part of this. We're going to look at 3 periods of time. Number one, the bigger picture of time leading up to the beginning of this year, going way back, big picture. For that discussion, however, I'm not going to do it here because I've done a video about this. I will refer to you to a video that I did released on 6/22 of this year, and it's called The Market Today Part 1. I did not actually get a lot of comments about this. I emailed it, I put it on the website, but I think this is a phenomenal video and one that you will truly like. If you want to view that, you can maybe go there now and then just save it, save the page and come back to it later, because I'm sure you want to listen to me now and not be listening to that. That's from the free stuff page. That should take you directly to the video, but if it doesn't take you directly to the video, once you get to the free stuff page, you want to go down to the section called miscellaneous videos. It's not an event. It was not an event I did. It was a video I did just for the website and for the email. So it's it's under miscellaneous videos, and it's the last one. On the website, the newest videos are at the end, okay? And if you want to get it from YouTube, which you're welcome to as well, this will take you directly to it on YouTube. Same thing, same everything, okay? So that's the Market Today Part 1, how we got there. And that is an explanation of how I went from, well, how I ended up with a short bias toward the beginning of this year in the long-term concept. I want you to remember when we talk about having a market bias, in my mind, there's always 3 divisions you have to think about. There's the long-term, the big picture. You know, where are we going over the next months, right? There's what I call the midterm, which is kind of like, maybe we're rallying for 3 years, but what if we drop for 4 months, 3 months? If you can recognize that, it can save and or make you a lot of money. And then there's a day trading bias. As a day trader, which I do, we have a different bias every day. We could be in the most bullish market in the world, but yeah, we could have a very bearish bias one day. So that flip-flops all over the place. The bigger picture leading up to this year. And as always, even if you have the right comments, you can still fool people, right? By mincing and changing your words and then pulling down videos you don't like and pumping the ones that worked, you can make people think you know what you're doing. I see this all the time in this business. This is, I hate to tell you, it's a real sleazy business. I mean, the concept of, teaching people about the market and, the services and that kind of stuff. There's a lot of sleaze out there. You guys know that probably. And a lot of people, what they'll do is they'll just put out videos saying bullish, bearish, and then at the end of the month or 6 months, they'll take down all the ones that are wrong and say, oh, look at how well I called this market. One of the things in the free stuff page, nothing is ever taken down. I never hide anything. Whatever I've said, I'm out there, I stand by. You know what? Every once in a while, I'm wrong. That happens. Maybe I'm wrong more than once in a while. I'm not sure. But I'm right enough that I do really well, and I don't hide anything because that's part of the learning process, is to say, hey, got it wrong this time. Did I do something wrong, or is it just one of those things you can't get it right every time? But if you go through and look, there's never anything taken down. So any videos discussing the market, whatever's there, a lot of it, of course, is defaulted back to the archives page. You got to click on top, go to the archives. It goes back to the beginning of DTS. The more recent ones are right on the free stuff page, usually the last couple dozen videos in any category. And finally, you can't fake results, right? You can say whatever you want. You can go back and mince your words and change your words and hide videos, whatever it is. But this is the long-term trader, which is a service I provide to people. And it's done well this year. Now, last year, it did really well. And I said to everybody, don't expect this again. It was an exceptional year, did like the same. And this year I've been lucky. It's been done really well also. And naturally it was, for a large part, a short bias, but I'm going to show you it's not all shorts. It's reading the market and understanding what's going on all the time. And how do you do this in the market? I want to emphasize this is done with technical analysis, especially if you're newer. People ask me if I'm 100% a technical trader. I have to answer no, I'm not. I'm 110% technical. There is no other way to make money in the market for 99.999% of you unless you have millions of dollars at your disposal. And I don't think anybody here listening to me has that. And if you do, maybe you can do something else. But for everybody, it's technical analysis. It's not used as a complement to something else. It's not used as a timing mechanism. It is the sole way that you make money. And anything else will only confuse you, slow you down, or mess you up. Yes, sometimes it looks like other things work. If you're in a very bullish market and you want to look at financial reports and you want to pick the bullish concepts out of the financial reports and be bullish in a bullish market, you're going to be right, but it's not because of what you're reading. It's because you're in a bullish market. So it's all technical analysis. There is kind of the final proof. And the other thing that I want to point out is I'm sitting here talking to you in this room, right? And if anything I ever said was untrue, some of you may be saying, well, you put some sign up there. I don't know you. Who are you? Well, this room is an open room. Right now there's 60 people in here. Usually we get about 80, 85 people. And if I said something untrue, I mean, I would insist that somebody call me out on it. Do some of you in here listening to me, do you get the long-term trader? I imagine there's a few of you here. You're not all here, but anybody? Yes, a few of you get the long-term trader? Okay. All right. So if I were to be saying something untrue, you guys would stand up and say, wait a minute, Paul, that's not quite right, right? So for the new people here, just so you know, there's there. And the people here are, you're open, you're free to comment. No names are hidden. There are no bots in this room. You know, a lot of rooms you go in, there are bots there. There are fake people that make fake comments, just like on Twitter. I know the rooms that have bots. I've been around a while. There's no bots here. People you see are real. The comments are real. Yada yada yada. So it's just real here. That's all it is. It's just real. It's just me having fun, and anybody wants to do whatever with me, free or not. Okay. So that was number one. That was going back to that video to get caught up to the beginning of this year. So number two, the second period of time I want to look at for educational experience and looking at the market and understanding how technical analysis does everything for you. I want to look at this move right here. So this is a weekly chart. This is the QQQ. I use this most of the time for the market. The QQQ and the SPY together are what I consider to be the market. Most of my charts, I show the QQQ. It really doesn't matter. That video you're going to watch explains to you how I picked up a bearish bias throughout here, and even a little bit going into up here. But obviously, the long-term trader did very well throughout this, whatever I did, and had a bearish bias. So very, very bearish bias throughout here. But all of a sudden, something happened here. And I got a bit of a bullish bias. And that's what I want to explain, is when you have a weekly chart like this and you're down here, you can see where I'm pointing, I assume. Yes, you can. How do you all of a sudden say, be bullish? What are you looking at? And that's what I want to get into a little bit. Maybe the difference between a C understanding of charts, like, you know, a grade in school, the letter C, and an A understanding of charts. Here's the daily chart. That's the weekly. There's the daily during that same period of time. So what I want to talk about is why all of a sudden you get a bullish bias in there. I had somebody email me last week, and he actually asked this exact question, coincidentally. I had already planned on doing this presentation. And I told him, hey, tune in, and I'm actually going to cover your question. And then that made me think, I had an email a couple months ago that I kind of saved because I was going to do the same thing, was kind of answer the question publicly. And I never did, so I went and dug it out. It took me a long time to find it. But here's this person's email. It says, oops, did I switch these emails around? Oh, no, that's right. The email from last week we'll do later when we get to the most recent time. This was from back in the beginning of July. Email, hi, there's nothing but bad news this week and inflation is taking off. This is always bad for the market. I've always trusted your calls. You're the one that got me bearish early this year and saved me tons of money. But how do you figure we're higher from here? And we're talking about this area, you know, right in here. Well, what generated that email? Well, what generated that email was because I started talking bullishly right in here. Now, when I say talking bullishly, what am I talking about? There's a daily market letter that goes out every day that has a full market bias on it, intraday, midterm, long term. And then there's also the long-term trader letter that mostly is providing plays, but also I explain my market bias when appropriate in there as well. And here we are just simply in a downtrend, right? Right here, as you'll see in a minute, I started saying we're not going to fall anymore. Now, why would you do that? I'm going to give you guys a few minutes here to just take a look. And also, to answer the question, you probably also want to see, you can look at your own charts, but that's the weekly chart there, right? There's the daily chart. The daily chart there is a little, you see a little bit more of it. But between those two charts, any clues on there, what it was that would make me say, hey, we're not falling anymore? And by the way, like I said in the beginning, it's not just me saying now, explaining to you why we didn't fall anymore. I will show you after I explain where I explained it then in real time also as well. Any clues, anybody? Because here's the typical reading of this chart, right? Paul, you're in a downtrend, right? Here I can draw some of these fancy lines on here, right? Or I'm really a good trader and I understand pivots. So, boom, 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 connect the dots. We're in a downtrend, Paul, and we have a big red bar on the chart. We're heading lower. There's technical analysis, C-rated from the box of Cracker Jack. I agree with all those comments. Can anybody look at that chart and tell me what I call from the language of charts? Are there any clues that tell you, hey, we may not be heading lower? Trading is always about two things. It's about having a hypothesis, if you will. Right? You look at a chart, something sticks out to you, it's a clue. It's like being a detective, you see a clue. It's like Columbo. You see a clue, right? And it sticks in your brain. For those of you, if you don't watch, I never heard of Columbo until I saw it on Cozy TV recently. He would see a clue and it would stick in his brain and he could never ever shake it until he proved it or disproved it. And that's what trading is like. You see a clue, and then you say, okay, I'm not going to bet my account that clue is the answer, but let me find some more answers. And you start analyzing from that point. So when you get to certain areas, you start analyzing, right? So what do we have? A failed breakdown in mid-June, immediate bounce after the new low. Okay, well, there's a couple of good things. There's some and I know both those guys are very, very qualified traders. 3 bottoming tails and may show support. Price is now there. Jim, that one I wouldn't really agree with. That one I wouldn't agree with. Because number one, bottoming tails are not necessarily bullish, for one thing. It depends what they look like on the inside. And number two, once you're below the bottoming tails, right, you're talking about May, right? So once you're below the bottoming tails, that actually becomes a bearish thing, sort of. If these are bullish, when you get under something bullish, it becomes bearish. So just the fact that there are tails there is not a bullish thing to me. Maybe you thought that at the time, but it wasn't. Here's the things that I want to review for you. And Eric and Chip, I got a couple of them right off the rip there because I know both of them and they're pretty good traders. But here's number one. Number one, and that's of course where we went. So my hypothesis is right and we had an extended rally. Number one, I'm cheating a little because I didn't show you this chart, but here's a monthly chart. So this is the moment in time we're looking at here. And I know I didn't show you this chart, but you could have pulled it out or taken a look at it. Now, there's a big wide area. You're going to tell me, Paul, you're going to tell me that because of this, you found some spot to the penny that you felt you're going to be bullish? And no, that's not at all the way it works. When you come into an area like this, it's kind of like, being in the red zone in football, right? You get different stats on it all of a sudden, right? What's your team's percentage inside the red zone? You get in this area, and then you want to start seeing if things are reacting. In other words, you just get a heads up, right? The monthly chart is broken, everything's in downtrends, but we're coming into a key area before we dropped a long time, and you just want to ask that question, hey, how will prices react to this area, right? So there's just kind of a heads up in this area in general for me, right? Number two is this, and this is a subtle one, but we had a long extended move down into this area, right? That was a very long, powerful move. Remember, wherever you are on a chart, you're bullish, you're bearish, whatever you are. But remember that every penny you move lower, you've attracted one more buyer and given up one more seller, right? People want to buy low. If people have shorted, they want to cover low. people who are selling want to sell high or short high, right? So does that make sense to you guys in theory that no matter where you are on a chart, I don't care where you are, if you're in an uptrend, downtrend, free falling, that anytime you drop an extra penny, you theoretically have attracted one more buyer and unattracted one more seller. Does that make sense what I said, everybody? So if you have that little balancing scale, at any moment in time, wherever you are, however out of balance you are, anytime you drop a penny, there's some person out there who said, ooh, that's a value now, I'll buy it. And some person said, oh, price is too low, I'm not selling it, right? Theoretically, right? So wherever you are in the scale, I always say that trading and understanding a chart in its simplest definition is understanding the battle between bulls and bears across the pertinent multiple time frames that you look at. So if you keep that in mind, when we have this much of a drop, we have exhausted a lot of sellers, right? And when the end of this drop comes right into a monthly area from before, a monthly quote unquote support area, I put it in quotes because it's not really necessarily support, it's just a focal area. I want to see what happens, right? So what happens? Well, we got a bounce. I didn't learn anything from that bounce. We made a new low, okay? Now, number one, we barely made a new low, and this was identified by one of those two comments you guys made. We barely made a new low, and we bounced. That's problematic right there. But here is the key that got me 100% committed bullishly. We made that new low, and that didn't follow through. Why does that get me 100% bullish? And very few people understand this unless you've taken class from me or you somehow found it out on your own. So my question is, why is that the coup de grace? I don't even know what that means. Yeah, think about it in reverse, right? If we're heading lower, you're making the argument we're heading lower, right? We're heading lower. So there we are. There's our downtrend. There's the thing. Oh, there's a fluke one day, right, Paul? Don't get all crazy about one day. And here we go. If we were heading lower, everybody, true or false, if we were heading lower, didn't we just open the door for the bears right there? We just went under this pivot. Didn't we just open the door? In other words, say, bears, whoever's out there. I don't know how many's out there. I never know, right? I never know for sure. But whatever bears are out there, here you go. Let's go. And I open the door and like 3 bears come out. Where are all you guys? And what do they say? They say, Paul, we're done. We're done, man. We did it here. We're done with all this. So the next day, we hold sideways. We gap up over it. Boom, done. That's it. We're not going lower, period. How far do we go higher? I have no clue. When you bounce in a downtrend, it's very difficult because you have a combination of short covering and idiots, and you just don't know. You just have to kind of let the level find itself. So you have to keep monitoring the chart and look for a similar event going the other way. So those were, did I discuss everything? Yeah, June low, April, June decline. Yeah. So those are the things I was really looking at. Now, you may say to me now, especially if you're new, you say, Paul, you told me in the beginning, you're not going to sit here and just do after the fact analysis. Well, even if that was after the fact analysis, I think it's pretty good. I think that's how you really read a chart. But I want to point out to you, this is on June 27th. So go back here. June 27th is what, right in here somewhere, right? June 27th. This is printed in the daily market letter. Some of you get this, not a lie, it goes out to people. It says, and if you can't read this, it says, I mentioned several times in different locations that we will likely have a very volatile time ahead of us. There are many stocks making lows right here. Just like when I was finding the top at the end of the year, you can never be sure when a top may be the top. The same is true here. There's no way I feel we're at the bottom, but you never know how big of a bounce you're going to get. So in other words, what I'm saying is this is not the bottom of the market. Big picture, right? Big picture, we're heading lower. But what if we bounce for 3 weeks, for 4 weeks, for 6 weeks? What if you're still short in your long-term account? Is that what you want to be? So that was comment number one. Then 3 days later on June 30th, assuming that, it's 3 days later, here it is. Obviously, there's a lot of bearishness to have the gap down today. So this day we were gapping down. But my contention has been over the last few days that we are not going to make a new low on the daily chart. Right here. Now, this is after this big red bar. Right? Blah, 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 blah. And of course, naturally, the trades and stuff are also appropriate for that area. So there's a difference between an A level understanding of charts and a C plus level. The C plus level has you understanding basic moves and you lose money. Is anybody, again, I don't expect anybody to volunteer this information, but maybe in your past, does anybody understand what I mean? But if you understand charts at a C plus level, that you know just enough to lose money pretty quickly. Does that ring true with anybody? Yeah, right. It's just the way it is. You have. It's kind of like being a C plus heart surgeon, right? It's like most of my patients live, but not all of them. So you have to take that next level, and this is where I get my most frustration. Is that a lot of people, the chief person coming to me for help, or they're asking, gee, I'm thinking of taking a seminar program, but I've taken classes before and it just doesn't seem to work. And it just drives me nuts because their understanding of charts is like zero. They don't know what support is, they don't know what resistance is, they don't really know what a trend is. And that's just the basic stuff. They don't understand any of the math and probabilities and all the other stuff I teach to help you make money from a chart. So it kind of drives me crazy the fact that people who don't ever learn it right have a bad rap for technical analysis because they think it doesn't work. Believe me, it works. It works wonderfully if you know what you're doing. The C plus level tells you this is a downtrend and a sell setup. And I put that in quotes because I'm just using it like an English word. A lot of you recognize what a sell setup is. But, a lot of sell setups are not really sell setups, not according to me. A better understanding has you ready to act. By the way, it's not hard at all to get an A level of understanding in technical analysis. It really is not. So I explained it to you. I showed you that the market commentary also in real time identified what was going on. But here's the ultimate thing. I have a long-term letter I put out with real-time trades for people who want to follow along. So what happened to the long-term trader during this time? Well, here's the move, right? End of June, beginning of July. On June 6th, and that was down here on this decline. You see this big decline here? We've been in and out of some puts in the long-term trader, and I closed out some of the puts that are at a very nice gain. So there was my first thing that was done. That is just a factual representation of trades that justify what I'm talking about right now. So I felt the bottom was coming, closed out some of the puts. 623, I took a long trade that stopped. I'm not bothering with the names or the entries or exits. None of that's relevant. The point is just here what basically happened. Took a long trade that stopped. In terms of R units, what does a trade that stopped cost you? An R unit is, if you're not familiar with the term, it's the amount of money you want to risk on a trade, right? So Peter might risk $100, but Dave's risking $2,000, whatever it is, you size, so that's it. So, right, so a losing trade loses 1 R. So if you're risking $1,000, you lost $1,000 in that first trade. The second trade made 10 R's, 10 times what you risk. That's a long trade. 7-6, that happened to be AMD, I remember. 7-7. Another long trade made 1.5, 7-14, another long trade made 3.6. So that's what, 15R minus 1, 14 R's. It's a woohoo, that's right. So it's 14 R's of profit in 1 month. From what? Where did that come from? It came from recognizing that a bounce was there. Now, what's the value of recognizing that bounce? Well, it's a lot because number one, you may say to me, well, okay, Paul, I don't need to get that good at it. So I didn't get those long trades. Who cares? But here's the other question. What about your short trades? Even if you're long term, these short trades are coming against you a lot. And what happens to those short trades? Give me some choices, guys, about what happens when you're short and the market comes back against you quite a bit. What's going to happen? Well, they rip higher, sure. I mean, depending on where you got in, Eric, right? You may go negative, right? Or you may just give back some profit. But once you start going higher, don't you have this terrible mental dilemma, everybody, right? Here, let's say you were up, just to make up a number, you were up 8 grand on shorts from the last month or 2 months, right? And you start going up, and now you're only up 3 grand. You've been through this mental dilemma? It's like you were up a lot of money, and now you gave a lot of it back, and now you're like, well, we're still in a weak market. I don't want to give up these shorts, but now I'm only up 1 grand. No, now I'm down $500, right? In other words, does your management kind of go out the door when your market bias is wrong? Do you understand what I'm saying, everybody? It gets tough. And the biggest thing maybe is how do you sleep at night, right? How are you sleeping at night when you're kind of, all of a sudden you realize you're wrong, but you realize you're wrong so late that it's now hurting you, and now you're in this, I call it being stuck in the middle. right? Being stuck in the middle, where you didn't take your money when, short wise, you didn't take your money when you had it. And now you're way up here and you're going to get out giving all your money back. And as soon as you get out, you're afraid what's going to happen. You're going to drop again. And you're going to feel like a real idiot because here you had money, you gave it back, and now you're not short when the market drops. So you get in this really terrible position sometimes. So that's why all this stuff is so important. It's not as easy as some people try to make it sound to say, oh, we're in a downtrend, just short. Well, okay, these people usually don't make much money because they short late, they cover in the wrong spot, whatever it is. And during that entire time, this was the long-term outlook every day. In other words, the long-term outlook has never changed. It's been bearish, max bearish since the beginning of the year. It's only that in between time frame where I said, okay, I'm going to go long for a few weeks here, and then we're back to short again, right? Make sense, everyone? So that's the second time. That's the second. The first conversation was a video that I gave you. I'll give it to you again if you logged in late. That discussed how I went short beginning of the year. This is area number 2, the July bounce, I like to call it. And now we're going to get to number 3, which is just recently, right here. It's where we're in right now, what we're dealing with every day, including today, right? So you get to have some real-time market commentary. Ongoing analysis. So let's talk about that chart. Shows where we are right now. That last bar on that chart there is yesterday. So this is current, right? So here actually was an email I got last week. I'm amazed sometimes they access your morning calls. Wednesday was a big topping tail. And this is last week. Thursday was a red ending on the low. As noted in your daily watch list email, market was gapping down. I thought it was reasonable to have a short bias. That was an expensive idea. What on the charts gave you confidence that would emerge to the upside? Please tell me. So I said, hey, tune in. That's what I'll talk about here a little bit. C plus rating of charts. Boom, 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 right? We're heading lower. I want you guys to list 4 things for me now that tell me we're not going lower. I have 4 in mind. You could probably do 5 if you wanted to. You mean this one, Chip? That one? Yeah, I'm not really calling that a failed breakdown. I'm calling that what turns out to be a novice gap. Now, a novice gap is when you're down a lot and then you gap down and everybody rallies on the gap down. Now, I'm not saying that it was a novice gap that you necessarily should have recognized as being novice the day it happened. You might have, but after the fact even, right? We're at the end of that green bar. That's kind of a big deal. Now, what does that one huge green bar mean in that case? Let's just answer that question first. What does that one green bar mean right there? What does that one green bar mean? Nobody has the right answer yet. One of the most important concepts of trading. Eric, man, you are just so good. I ought to just ask questions and let you do this owner. Eric, he always has the right answers. That one bar means nothing, guys. It means nothing. Remember, one of the most important things they teach about trading, even just in a free webinar like this, it's not what happens. It's the reaction to what happens. It's the reaction to what happens. That's what you have to remember. A gap down in a downtrend, you may just get a day of short covering, right? And once the shorts cover, there's no buyers. You just start bleeding away again. You've seen that happen sometimes. I mean, look at this. Well, that was a 3-day rally, but it's the reaction to what happens. Now, number 1 to me was, again, this protracted decline. Just like, remember, I just showed you this back in June, July, remember? We talked about the fact that when you have that huge decline, that you start tipping the scales, that every penny lower, you're adding an extra bull, subtracting an extra bear. So number 1 is a huge decline. Number 2 is, okay, we had a novice gap, but the big question is, how's the novice gap reacted to? Well, we get a red bar that eats up half the green bar, and then we gap up and hold. That's the day right there. That green bar, that third bar, that's the big deal. Why is that a big deal? Why is that the big deal? Little green bar after the red bar, after the big green bar. Because Eric said so. Eric, you're going to have to change your name next time you log in, I think. Yeah, pretty much, Carmen. Yeah, well, yeah, you're calling it a ribby. I could call it Uncle Peter's coffin, but that doesn't explain what it is. It's a red bar ignored. But what it means specifically, and what I want people to understand, is that, okay, we have this big green bar come in. Now, here's the question. After that big green bar closes, do you know what's going to happen if and when the bears start selling? Exactly, David. Exactly. Right. right? So the bears come in and they start selling, right? And if they were going to follow through, there's their chance. We gap up the next day, no big deal, but then we hold. So right there, that tells you a lot. It's to say, hey, bears, once again, what's your answer? It's like in a football game, right? Scores 7 points, the other team comes back, 4 and out, you're done, you punt. You got nothing. Bears, you got nothing to show me. So it's another piece of the puzzle where you say, okay, you know what, right here, now I'm bullish, right? And then it's a matter of monitoring the chart all the time. Now, what we're looking for now is to see the bulls staying in control in the daily chart. That doesn't mean they win every day. It doesn't mean we don't have selling. It means that they stay in control every day. So we go up a couple days, and boom, we come back down to this level. What happens? 3-day rally, right? I am now in a tentative uptrend, right? So here we get to the relevant days, which I think the email was discussing, was here and here, right? Well, I'm looking at this chart and saying, hey, and I think this next day is Friday, right? Am I right about that? That was Friday. So I'm looking at the daily chart saying we're coming into an area that's going to get bought again. Yeah, that was Friday. I have it right. Yeah, that was Friday, right? And this is going on right now. This is going on currently. So what happened today, and again, you have to ignore FOMC a little bit. You know, the market really, I know you're not going to agree with me on this, but the market doesn't care about FOMC anymore. It's all built in. There's going to be the knee-jerk reaction. That's what we saw today, but that doesn't really affect me a whole lot. What we want to see is where we go, what the reaction is tomorrow to today's sell-off. There's no surprise there's a knee-jerk reaction today because they yin yang intentionally tried to slam the market, so we got a reaction to it this afternoon. But it's not going to matter if that's already built into the card, so we'll see what happens here. But point being, forget about today, doesn't matter. That's how I look at it, and that's how I read that to understand. And hopefully, Mr. Email, I hope that answers your question. I can certainly answer better here than I could have in an email. Okay. Are there any questions on that? Yeah, actually, Gary, I lied. I actually did this whole presentation just for you, so I hope you appreciate that. Let me add a couple more comments here, though, if I may. Again, C plus answers are in a downtrend. We talked about that, but this ignores a lot of the clues if you understand the language of charts. So that's what we just did. I just didn't move forward to that slide. One final important comment. If you're impressed by this, remember two things. It's not hard to learn, especially if you're new. And as much as you may have been impressed about the discussion about the market, I actually rarely trade the market itself. True, everybody? Everything discussed here applies to the market as well as stocks, Forex, or commodities, right? Here's why. I use the market as a bias, but I feel it's too hard to make money just trading the market. Using that bias helps me to trade stocks. Here's an example from today, and I threw this in here last minute because I'm thinking, what a great example. Because, right, guys, today, we're sitting there today. It says right at the top, I had no clue where the market was going, LOL, right? But the point of this is that today, it was a good day. It was 1.5 times the goal. It should have been more. I had a Uber trade that was up my day's goal, and I gave it all back. Not necessarily incorrect, but that's what I did. But then after 10 o'clock, I ended up with a long and a short. And we're sitting there, and the long is going up, and the short's going down. They're both making money, right? So what does that have to do with the market bias? What does that have to do with FOMC? What does that have to do with fundamental? What does that have to do with anything? It has to do with the chart. It has to do with the balance of buyers and sellers. So I had par along, which didn't make a lot of money. That's partly because I had to exit going into FOMC. I think it would have kept dropping probably, but FOMC, we just got the stop down tight. So par made a little bit of money. But the point is, during this period of time here, I didn't have the best entry in this. We're falling, right, during that late morning time. And at the same time, HNZP going up, 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 up. And HNZP made 2.5 hour, 2.25 hour, 2.3 hour. So made just HNZP made 2 days gold. And I think that's the neat thing. So the point is I try to form my trades around a bias in the market, but if I'm wrong on the market bias, I can still make money. So to me, it's like you're increasing your odds by kind of padding your trades around a market bias. I'm not sure if that makes a lot of sense to you, but to me, it's what trading is all about, really. Playing stocks inside a market bias gives you the odds of being right in my mind, but it sure doesn't hurt to have the right bias. I actually thought I'd be out of time, so I didn't add any more slides. But last week, I just want to show you kind of the value of that, and why I'm not going to show you. Last week I had almost double the week's goal, right? I am typically more of a short bias person. Here's how I think. And many of you know this. If the market is in a bullish state, you should be what? Everybody, long or short? Long. If the market is in a very bearish state, you should be what? You should be short. If the market is convoluted, sideways, bouncing all over the place, you could decide to not trade, but if you're going to trade, what should you do? If the market is just neutral in terms of bullish or bearish, what should you do? I said you could choose to not trade, but if you're going to trade, what do you do? And actually, I like trading sloppy markets very much. I love trading sloppy markets for probably the reason because other people don't like trading them. Eric's never wrong. Everybody's typing, but I don't see any comments coming up. You guys need to take typing classes. You can type really fast, like I do. But you short rallies. You short rallies. Yeah, you short rallies. You don't go long and sloppy. You short rallies because things drop faster than they rally. They call it gravity. So I tend to have a short bias most of the time because most of the time things are sloppy. So things are downtrending, I'm bearish. If things are sloppy, I'm bearish. If things are bullish, I'm bullish. What bias did I have last week? Well, I had a bullish bias last week for the reasons I discussed. How much did that help me? Well, I made almost double the goal last week, but here's the point I want you to make is let's put it in R units, I made 8 R units long and a half of an R unit short. Do you think the bias helped me last week? Do you think that market bias helped me last week? 22 trades over 5 days, four trades a day on average. Yeah, I mean, obviously on a week like that, it's huge because it gives you that distinction between buying pullbacks or shorting rallies, and there was more to be made buying pullbacks than shorting rallies in general. I also have an example that I have marked down. I have several educational email ideas, and one of them was discussing a day from last week where I had the wrong market bias and I had a really good day. So you guys here are all excited about the, given today's market close, 265 thoughts now. Nothing changes, Jeff? Nothing changes. Like we just said, it's a reaction to what's going to happen tomorrow. So what would have me, the only way I would be bearish on the daily chart, and remember you're talking to a very bearish person who went bullish 2 weeks ago, just for a short time. The only way I'd be bearish is if we can put in some kind of green, either half a day tomorrow or all day tomorrow, and then go under yesterday and today on the next day. Other than that, I'm just kind of watching. Sometimes things just get sloppy. Harvard, going under last week's low doesn't mean anything. The weekly high or low, that doesn't mean anything. But nothing, I've just happened to, in today's educational presentation, happen to discuss the market right up to date, and nothing changes my mind based on what happened today. Remember, the only time that news matters is when it's what I consider to be shock value news. And it's not always easy to know what shock value. Shock value means that the market has not contemplated it. And I'll tell you, it's rare. And yes, Oregon dropping off the map would be shock value. Some yodel on TV saying that we're not going to stop raising interest rates is not shock value. If they land one, yeah, because I don't think the market really thinks one's going to land. But talking about them is already talked to death. I know it's years ago that H whatever market does on Fed day gets reversed the next day. Is still true. Chip, what I comment on a lot is that 90% of the time over the last couple of years, if you look that the market at 10 o'clock or 10:30 the following day is almost always where it was at 2 o'clock the day of the Fed meeting. And the only exceptions are where you have some truly shock value type of things. But even this last year with all the stuff going on, it's amazing how many times it's true. So it wouldn't shock me if that was true. We did have quite a sell-off this afternoon, though, which was quite. They did the right thing, though, in terms of bigger picture, getting the market to rally. The market hates uncertainty, and the worst thing they could do would be to sit there and say, if you're bullish, the worst thing they could do would be to sit there and say, oh, we're going to ease up on rates soon, don't worry, market, things will be fine. Whenever you help the market, it throws up on you, 100% guaranteed. If you give the middle finger to the market, it reacts for a day or two and then it bounces back. Oh, Dave, I'd have to be in the moment tomorrow. I have no clue. I'd want to see some trading, but here's my thing, Dave. I don't like trading the Fed meeting, period. I don't do that. And to me, the Fed meeting continues until 10:30 the next day. So anything I do tomorrow is going to be a gap, something unique. I'm not going to be anything market biased until I see things settle down a little bit. The reason is, to me, there's just no odds in it. I trade charts, and for periods of time, the charts just get turned off. Fed meeting, some crazy news announcement, things just go crazy, and there's nothing to understand or read. You just have to let things settle down. And I know certainly there is possibly opportunity whenever the market moves huge amounts. There's opportunity. I get that. But opportunity is no good to me if you don't have an edge. Would you agree with that? I know the market pattern on a Fed day. 1, 2, 3, boom, 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 boom. But things are crazy. I don't want you to take this the wrong way, but to me, a normal, boring trading day, it's too easy to make money that way, to screw around with Fed meetings and other goofy stuff like that. Oh, okay. I know you, yeah. Okay. All right. All right. I didn't know your grandson. Wow. Fantastic. You're not the first. I have several families trading with me, and I have, there's also, what is he? There's another grandson, and there's also the almost son-in-law. There's the boyfriend of the daughter of one of my students. Funny. All right. Is there anything else? For those of you that are just here having fun, don't forget to visit the free stuff page. The free stuff page is right here. I'll give you the link to the free stuff page. I'll also give you the link to that video I mentioned. I said the first part of tonight was understanding how I got a bearish bias at the beginning of the year. And that is explained in this video right here. Boom. And here is the free stuff page. All right. Look at that, 6 o'clock, like on the button, 30 seconds past 6 o'clock. Have a great weekend, everybody, coming up. And for those of you in the seminar program, I'll see you there. Those of you in the room, I'll see you tomorrow. And anybody with questions, feel free to get a hold of me. Email I'll put out there as the last thing. Especially if you're new, don't feel free to get a hold and email with me, or we can chat if you want to about whatever's going on. All right, guys, have a good one.